All right, guys, good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is Friday, the 11th of September. And so, as we conclude the week, we will also go over this week's performance. You can see for today, change versus open. This is, to kind of go back to where we started on the day. We had that bounce overnight, but I think it was a little bit predictable this morning that the bounce wasn't going to be able to be held. We keep getting these weak bounces and then kind of a flush lower. So that was the main story of the day. But then we did see some bright spots. So I want to go over those bright spots with you today. Let me just go over the performance first. And we'll go over the performance for the week too. But you could see Qs finished down about 70 basis points. You could see they sold off throughout the session. IWM small caps also finished down. And again, just a weird kind of thing going on with the VIX, which we talked about in yesterday's video too. Just down hard again today. So I'm calling this for now a bullish divergence. The fact that the VIX is going down here, to me, it is almost, I'm using it as a little bit of light at the end of the tunnel. I know that there's everybody who's analyzing gamma moves and everything else, but, I'm going to take this just very simply. I think everything that's been going on with options and so forth, yes, the volume has been higher than normal in options, but overall, all these mechanisms that you're now hearing about with market makers hedging and so forth, that's always been the case, right? Every time someone trades options, a market maker has to hedge. And there is a gamma move up and down, whether or not they actually have to add more to their hedge or not. This is not something new, that has been going on for the last couple weeks. Is it a little bit larger than normal because of the options? So many options are being traded and the higher the normal volume in options. Yeah, a little bit, but this is since options were invented. There's no difference of how a market maker is hedging now versus how they used to be. Of course, they have more models and so forth and computer programs than when options first came about. But this is not anything new. So, so don't. I would say don't read too much into this VIX move because I think that it's generally. How this has been working for a while. But we'll talk about the VIX in a minute. I'll bring up the charts as I usually do. But if we look at today's sectors, right, you could see that there are some standout areas. Of course, the areas on the downside, it's a lot of this higher valuation stuff that's coming in, and I think that's a normal type, correction from what we've seen. I know it's been a bit painful. I certainly was frustrated yesterday. Doing a couple things wrong, right? And that's part of the process too. And for any trader, you're going to make some mistakes. Everybody makes mistakes, and the reason why you could hear my frustration in yesterday's video is because it's a part of the process. And the reason why I think you'll find it probably different listening to my videos and being frustrated is because I'm actually trading. Right? Some of these guys on Twitter and who run other trading rooms, they're not trading, or if they are, who knows what they're doing. But everything that we do is obviously, like, I post my results at the end of the month, and post all my trades real time and so forth. We're completely transparent here, but you really have to kind of wonder what some people are doing, and I think that's why people watch my videos too, and are in the Tribeca Trade Group room, because there's such a respect for one another. We're all taking on risk and trading and so forth, and I think that's just different than a lot of places, right? It's a lot easier to be an armchair quarterback in all of this, but it's really it's a difficult process when you're when you're in it in the thick of things, right? As we are on a day-to-day basis. All right. So that said, I think at this point, to see some of these groups kind of get hit a bit, it's the FANG stocks, it's the software. I think these areas are still, maybe we're getting to the point where this is getting a little bit more washed out now, which I think is good. But these are the most overcrowded areas, right? Everybody's been in tech. And it's also such a big part of the indices too. We talked about that about a week ago when I talked about a little bit of the value rotation. The problem is that if there is a little bit of this rotation out of growth and into value, what happens is it brings the overall markets down because there's just so much more growth in the S&P because it's market cap weighted, versus value. So I think that's a little bit of what we're seeing today too. But let's talk about first before I kind of get into some charts. Let's talk about this week's performance as well as this was last week's performance. So you can see we've got now 2 weeks of distribution, right? The week before, Qs were down 3.1%, SPY was down 2.4%. If you look at this week, you could see that SPY was down another 3.3%, and really now, Q's down 6%. So you've got a decent correction. So I think, just a little bit of trading hunch for next week is that, we'll continue to kind of let this play out. But I think what happens, right, as we see a lot of the growth areas sell off, is they're going to become more attractive. Whether that's in the beginning of next week or the end of next week, I think at some point, the growth areas will become a little bit more in favor because it's like a tug of war back and forth, right? Growth has been, the outperformer for so long, but that doesn't mean that there's going to be that there's not going to be a rotation. And I think, that's basically what you get, and growth sells off a little bit and then becomes a bit more attractive. And I really don't see a lot of other areas that I think are going to get, attention in terms of putting your money in places. I think stocks are still going to be the place to be because you can't get anything in cash, in terms of yield. And I think bonds are going sideways. Gold looks a bit interesting, right? Gold keeps trying. I actually added a gold position today that I had been talking about. But I really think that this is going to continue to be the place to be, but we were in need of a decent correction, right? The sentiment was super hot now for like 2 months, and we were overdue for this type of thing. So we'll see. What I continue to see is relative strength, and look at these 3-4 areas. I want to go through these charts. In some of these sectors for you, just to see that I think a lot of this again is a little bit of rotation mixed in with just overall selling pressure. So S&P, so where are we, right? We're in value. Of course, yesterday was rejected. Today we get a little bit of a doji, but, we've got support coming up at around 3267. Now, we don't know if that's going to hold next week if we continue to get this selling pressure or a bounce and then more selling pressure. I think what I would be watching for is this 3215 to the downside. This is the value area that we're going to see for next week, so we're probably going to open up right around the bottom of value, and we'll see if we can manage to stay above 325. Basically right where we are, then we don't have to worry about this 3215. But if we do, right, and that's why I've been carrying more cash than usual, and and got kind of unwound a bunch of positions yesterday too. That helped me a lot today. That always does. Whenever I unwind some positions, whether or not it's into strength or into weakness, I see a lot clearer after that, and I take trades for what they are, and it allows me to be a lot more objective. Like I even was playing the Qs a little bit short today too, right? Something that I haven't done that much. Because we've been in uptrends for so long, right? I did lose that a little bit of muscle memory with shorting some positions, but that's how I see the S&P. I think first things first, if we hold on to this level and bounce, I think very constructive. If not, we've got some levels like 3.2. Next level down would be 3.267. For the Qs, the Qs did break the 50-day moving average, but we do have that support. I know not everybody uses value areas, but I do favor the value areas a little bit over the moving averages. But I think 265.41, so it's another $5 down, which would not be the end of the world. I think at this point we actually touched that today. So we'll see. And again, we could do a lot of different things like we kind of talked about earlier in the week, we could go sideways here for a bit. Remember again what we did back in, if we bring back the S&P chart, I've been referencing this June correction because I do think it has some similarities, right? And we did bounce a little bit and then kind of revert lower, and we basically did this for around the whole month of June. So we're now a little over a third of the way, or just about a third, a little over a third of the way through September. So we've had 2 down weeks, and we'll see if buyers will start to kind of come in a little bit and test the waters next week. I think that will happen at some point next week. I don't know if it's going to be at the beginning or end, but that's my little hunch. I'm not making a prediction, just something that I'm probably going to position for a little bit next week. All right, so that's that. And then, like I said, I wanted to go over a couple things, but there was this article that I read, and I posted all this on Twitter too. But I think, if you look at the performance today in the steel ETF, again, I'm welcoming these things to kind of rally a little bit. But if you look at the performance today, this HCC, right, was talking about that. Now this is I guess a coal producer, which is not something that I really want to invest in, but they were talking about that Metal Bulletin reported that seaborne premium prices rose in Chinese demand. So kind of interesting, coal prices, and I have heard that the steel demand is strong, has been getting stronger there too. But if you look at the performance, I mean, something like this SLX, which is the steel ETF, a lot of international names in here, but it looks like it's trying to actually, it's pretty coiled up. It does have to break 3121, which it did not do that at the end of the day. Still finished up 2% for the day. So I'm not sure if you look at some of these steel names, like I looked at Nucor today, didn't like the chart enough to trade it, but this is this HCC, really nice break of the break higher off the 200-day moving average. So I do think it's kind of interesting. Rio was one name that also, nice hammer. Sorry, not hammer. nice bar here and out to new highs. So very strong to see a steel name break out like this. This is Rio Tinto, right? I believe they're mainly steel. They do some other things too, but there was a little bit of calls in there. And look at the volume today too on the breakout. So I think pretty impressive. Then of course, if you break apart the transports, right? FedEx had a big day, up 3.7%. In a tough market. It did get a price target raise, but this thing has just continued to rally very hard. What I'm also very impressed with is the rails. UNP did not make a new high today, but NSC was right there, up 2% for the day. And I think that's a good sign, right? Even though it's not tech, right? This is pretty interesting to me, right? And CSX is another one, right, that I think looks interesting here too. Also up about 2% for the day. I'll just wait for Thinkorswim here for just a second. There you go. This is not. This chart is not as strong as the 2 other ones that I just mentioned, but I still think it's pretty interesting. And then of course IYT, the transport ETF, which has a lot of things going on in it, but I think it's interesting that again that this group is very strong and the rails are very strong. To me, that doesn't seem all that bearish to see that, right? The home builders also, again, up 1.6%. I think this XHB looks a little bit, they both look almost identical, but they did move back into value, and they're above now all the short-term moving averages. I know they're not above value and hasn't broken out, but this looks pretty good to me. To see this retake. We talked about this group earlier in the week, so I think pretty good. Looking. DHI looks great here. I think moved back inside value. Lennar is another one that I like. Lennar is almost back to 52-week highs. So, it's just a little bit of rotation that I don't see everything breaking down, which is good. Now, the breadth is still, we've talked about that as well a few times earlier in the week. That's going to have to do something a little bit different than what we're seeing. Now, this won't update till tomorrow. But you could see this is a big slide in market breadth. We don't want to see this slide further. If this really starts to kind of move down like this, then I would say we've got something bigger and a more, a bigger issue on our hands. So we'll have to pay attention to that. I don't think it probably didn't move much today, considering the market breadth that you're seeing on the bottom left of my screen. But we don't want to see something like this break down, right? And we do know that this was a lower high, so this has got to basically do something different soon, right? So again, maybe that happens next week. We'll just have to see how this works out for next week. So I mentioned I would talk a little bit about the VIX. Notice what this thing is doing. It is now kind of, so again, I'm not going to play, oh, well, read into this too much. I'm just going to take the price action and what we see in the VIX for what it is. It's not showing any heightened volatility, and it's basically showing a pretty, what we've talked about again earlier in the week, that we've had a bout of volatility, and now the VIX is back below the 200-day moving average. So again, I forget about all the things that you're reading in the news and financial media about gamma moves and why it's not affecting the VIX. I think we're just not seeing volatility spike here, and I think that's a pretty good sign. VXN, same thing. I wanted to see this move back below 40, right? It's back to 35. So, and if we look at the volatility of the VIX itself too, that's also kind of confirming that volatility is not present. So the takeaway from this is, I think, pretty darn positive that we're not saying that. You could argue with me, and you could, read into these things and come up with a reason for what it's doing, but I'm going to use it for what it is and telling me that it's a bullish divergence. So I think that's, again, something good. And again, I'm not saying the picture is perfect, looking at the market breadth and so forth, but, I think things are starting to get a little bit better, and I'm starting to see the light at the end of the tunnel. So, what did I do today in terms of trades? I traded some of these things, like, where I see, rather than like bottom picking today, if we go to the Qs, I did think, like, I was looking at the 5-minute value area, and we kept on flirting with this, right? We broke. This was at 11:30 this morning, and I was even saying in the room, we try to kind of take some ground back, and we basically couldn't do it. And I did say to the trading room, I said, I'm seeing a lot of things that look like, not just the indices, but some individual names that look like they're ready to break lower for the day. So I did put on some Qs puts. They worked pretty decently, and I was in some things on the long side, like Caterpillar. Caterpillar got right to the VPOC that I was aiming for. I unwound the trade here. I was a little bit afraid that the overall market would go down, which it did. But son of a gun, this thing did take out the VPOC there. So here was my trade in. I was having a really, really good day until I added a little bit of Walmart for next week, which did not work out. And I'm still holding for next week because it's down too much for me to unwind it. So it is what it is. I have a play on a short-term trade next week for Walmart, but sometimes that's how option activity works, right? They go and they pile into some calls and they don't work. We've seen it before. It happens. Again, there's a 50-50 shot for these trades that we see option activity. I know the folks on Twitter who are the option jockeys don't talk about that, but it's basically 50-50 in the option activity that we see on the tape, no matter how aggressive it is. I'm kind of stuck in those, but everything else that I traded worked out pretty well. This other name, and this is another area, like the materials space, right? They were talking about on CNBC Dow, which I was in, for about a week. This did go ahead and take out this VPOC up here. They did roll out of their September calls and into December. But this is one of the strong names. LYB was something that I traded today, and I did force a target at the end of the day. There's a VPOC up here. Oh, it did take out the VPOC. Look at that. Son of a gun. I didn't get filled for some reason, but I was trying to get 75 they didn't fill me on this for some reason, but I took a target at I think 74.40 in LYB, but I think this one has more to go. All right, so that's another trade that we did today, and then yeah, I did do a little bit of some bargain hunting at the end of the day. I put on a call spread for Amazon next week. I think at this point, Amazon warrants a long, taking a shot on a play for next week. It's down from 35.52 all the way down. It's down about over $400 from the highs. So I'm okay putting on a weekly trade in this, looking for a bounce. Right. Again, the most I can lose is the premium on that type of trade. And there's some support here. 3096 is the bottom of value. And of course, if not, there's a VPOC lower, which will probably make Amazon more attractive to me. I do like to go over, I do like to get involved in quality names after a big dip. So I did put on a trade for next week in Amazon. What else did I do? I bought a little bit of Adobe on the lows of the day, and then Lulu. Right. I mentioned that Lulu, there's this VPOC down here, which I was going to add into. I know this is pretty ugly since earnings, and it's below value. You got a couple sell signals in here, but I still don't understand why this thing is down. So I took a shot, and this was so there's two downside VPOCs that were taken out today. The one here on the 1 hour, and again, and the major one on the daily. So I said all along that I was going to try a trade. So I did put on some calls, going out to October in Lulu, looking for a bounce. At this point, and hopefully this will settle in here. If not, we got bigger problems. So if this thing goes lower, below 310, I would have to abandon that position. But for now, I'm playing that Virgin Point of Control takeout, which is this red line here. All right, so that's about it. I think that's all I'm going to cover for today. But yeah, I think the main message is that I think we're getting closer to the point that we're due for some type of a bigger bounce, right? And again, one of the things that I've talked about is that we're in this short-term downtrend, right? Making lower highs all along the way here, right? So we're not out of this by any means, and we're just going to have to see how if the lows from this week hold. And we have no evidence of that yet happening. So I think we're just going to need, a little bit more time to go on, and we'll go from there. I thought the Katie Stockton interview on CNBC, she's one of my favorite technicians, and what she said was that, hey, she's long-term bullish, but she wouldn't be surprised if there's a little bit more volatility next week. I share the same thing too, but like I said, I think we're getting closer. So, all right, guys, have a great weekend, and I'll see you guys on Monday for Tribeca Trade Group members. Of course, I'll be doing my usual, work where we do the macro video as well as the watch list video, and with some setups to kind of watch for next week. Have a great weekend, guys.